Hello, and welcome to this week's PennEnergy Petroleum Update. I'm J.B. Avance. Oil prices have risen to a 2.5-year high on violence and protests in Libya. Thousands of protesters have taken to the streets in the North African country to call for a change in leadership. Muammar Gaddafi, who has ruled the nation for more than 30 years, has responded with attacks against the public. More than 200 are feared dead. Operators in Libya have curtailed production and emergency evacuated foreign personnel. An OPEC member nation, Libya exports more than 1 million barrels of oil a day. Additionally, fears of protests, riots, and violence spreading across the Middle East and North Africa has spurred investments in crude oil. The price of Brent crude continues to trade above the $102 mark in London, and the price of crude oil on the NYMEX has reached near $92 a barrel in the U.S. In shale news this week, Australian minerals and mining major BHP Billiton has agreed to acquire all of the U.S. independent Chesapeake Energy's Fayetteville shale assets for $4.75 billion. The second largest producer of natural gas in the U.S., Chesapeake reported earlier this month that the company was interested in selling the Fayetteville shale assets. Marking its entrance into shale development, BHP Billiton is gaining 487,000 acres of leasehold and producing natural gas properties in Arkansas, as well as a midstream pipeline system. In major deals this week, BP has signed an unprecedented $7.2 billion agreement with Reliance Industries. The agreement will earn BP a 30% stake in Reliance's 23 oil and gas PSAs in India, including the prolific KG-D6 offshore block. Additionally, the companies are forming a 50-50 joint venture for natural gas marketing in India. While Reliance is gaining valuable deepwater experience by partnering with BP, BP is gaining access to oil and gas resources via NOC in a country that is rapidly industrializing and where energy demand is predicted to skyrocket. In Western Australia, the Browse LNG project has moved forward with operator Woodside Petroleum awarding contracts. 2 joint ventures have been awarded the FEED contract on the development. A joint venture between Japan's Kyoto, U.S.-based CB&I, and Italy's Saipem has been awarded the FEED contract for the onshore LNG and condensate production and export facilities for the project. Additionally, a joint venture between KBR, Leighton, and John Holland has been awarded the FEED contract for the 3 4 million ton per annum LNG trains, as well as associated infrastructure and accommodation and marine facilities. Sourcing natural gas from 3 fields off the coast of Broome, the Browse LNG project will be located onshore near James Price Point. The final investment decision is expected early 2012. In the United States offshore continued drilling moratorium saga, a federal district judge in New Orleans has ordered the BOEMR to decide whether to issue 5 pending Gulf of Mexico drilling permit applications to INSCO within the next 30 days. The drilling permits have been pending for some time, 4 to 9 months, in stark contrast to the 2 weeks it took to approve drilling permits before the Macondo accident. The judge called the drilling permit delays both unreasonable and increasingly inexcusable. Thank you for joining us today. All these stories and more are available to read on PennEnergy.com. Stay up to date on the latest oil and gas news worldwide by signing up to receive our daily and weekly e-newsletters at www.pennenergy.com.